There are four key crucial components to trading profitably according to ICT. 1. Determining your bias. 2. Gauging order flow. 3. Executing your entry model. And 4. What do you think that is? That's right, you guessed it. Time of day. A lot of traders are able to master the first three very quickly and easily, but often are missing that final piece of the pie that will absolutely transform your trading. Price first moves on time before you start looking at the other three. So it is absolutely critical that you master this. That's why I am starting a new series on understanding time of day specifically for equities. That's what I trade. So stick around. By the end of this series, you'll have mastered the final piece it takes to trade profitably. All right, welcome to another YouTube video with your boy Chike Investing. And like I mentioned before, we're going to be starting a brand new series on breaking down time of day utilizing ICT trading concepts. Now, before we get into that, some housekeeping items. Before we get started, please make sure to press that like button. That's what it's for. Also, feel free to subscribe so you don't miss a single part of this series. Press that notification bell as well so you can automatically get notified. And there's a Discord link below, right? It's a free Discord. I'll see you guys in there. It's a lot more content that we're going to be bringing over the next couple of weeks. And I'll be starting a mentorship series soon where you can sign up. So please make sure that you join in that Discord so that you don't miss any of this critical information. Lastly, if you're filling up for it, you can drop a comment below about one thing that you are grateful for this week. Before we even get into some of this critical information, it's really pertinent that you stick around for this whole video. Make sure that you're taking notes because this is going to be life-changing. This is often the difference in between a lot of people's ability to turn around a profit because they don't understand time of day. They know how to read higher time frame order flow. They know how to develop a bias. You know, they use SMT, they use open range gaps, they find draw on liquidity, but price is not going to move there unless it's the right time of day. That's why ICT talks about price first moves on time. And that's the first thing that we need to understand that'll help you really get an understanding of how important this is. Let's get straight into it. So this series is going to break up the New York morning session. We're also going to talk about the lunch session, and we're going to talk about the PM session. And specifically, this is all going to be in Eastern Standard Time. But in this video, I'm going to focus purely on the New York morning session. And this is going to apply for futures, equity futures. That is what the series is going to be about. I don't personally trade Forex anymore, so I cannot talk with a lot of passion about it. However, I can create a new series of videos for Forex if that is something that the audience is interested in. Feel free to leave a comment below about that as well. Now, as you can see here, we're going to break down the New York morning session actually into three phases, okay? And within each phase, we're going to be talking about key intra-session time blocks, key points to keep in mind, essentially takeaways about it, and any bonus tips that you're going to need to learn. So first, we're going to start with pre-market open. Now, this typically happens between 7 to 9:30 a.m. And within within this time frame, the time blocks that you need to be aware of that are critical within this session are 7 to 7:30, 8 to 8:30, and 9 to 9:30, as well as any macro times that are involved in this session as well. 7:50 to 8:10 and 8:50 to 9:10. Now I'm going to break those two down very quickly for you. These time blocks that I mentioned before, 7 to 7:30, 8 to 8:30, and 9 to 9:30, are the periods of time within this pre-market session that is unique to this pre-market session where relatively equal lows and equal highs are likely to form. And I will show you a couple of examples of this going into the next slides, but this is actually released in ICT's 2024 mentorship where he talks about pre-market open, how to trade that. Typically, you're going to be looking for equal highs and equal lows to get rated so you can go to the opposite side of the range. And, you know, we'll get into some more examples around that. But also, as you can see, macro times as well. Okay, so what is a macro? A macro is the last 10 minutes and the first 10 minutes of every hour, okay, within the trading day. And these are critical because it tends to have a lot of high probability setups that are forming, right? And that's because there is clear liquidity raids that typically happen around that time and often going for, you know, the draw on liquidity around that time as well. So we'll go over a couple macro examples as well for each of these time frames. But here's a bonus tip. Now, if you're going to be trading the pre-market open, right, a lot of people don't know which session is, you know, typically going to fit for me, which session would I like to trade. Now, the best days to trade pre-market open, and you would actually just want to stay out of the AM session after that entirely, is when there's no news. So like a no news Monday, or there's been a large expansion away from the midnight open. Now, I will go over examples of that as well. But those are two times where trading pre-market can actually be, you'll see some of the best price action for the rest of the day. So this is probably a good time to wake up at 7 a.m. and actually start your trading for the day and get it done by 9:30. And then once the market opens, once you've seen these conditions, it's a no news day or there's a large expansion, you close your charts and you've made your money for the day already, because that's when the best price action tends to be. Now, the second part of the AM session I want to talk about is the opening range. Now that typically happens between 9:30 to 10 a.m. And the time block for this is the entire 30 minutes, right? So like I said, the major time block is basically just a point in time that is within the session that is even more critical to understanding the dynamics of it and when you're likely to see setups or something unique is likely to happen. Now, this entire 30 minutes is actually pretty particular, and we'll get into it. But then also the macro time, like I mentioned before, is the time where you typically can see your high probability setup, or you can see what the next hour is going to look like. It's typically between 9:50 to 10 a.m. Now, there's three potential outcomes that can happen within this opening range, right? There's going to be the Judas swing. Right, the Judas swing is when it runs to the opposite. So let's say you have a bias for it to go bullish. You would actually see a rage against liquidity to the sell side. So that's to the downside first before it actually reverses and goes for the AM trend higher. Now, immediate expansion is, when you don't see that Judas swing and price just immediately takes off in the direction that it's going to go for the rest of the AM. And then lastly, it could consolidate. And if you see consolidation, that can be very telling of the fact that price is likely not to do anything for the rest of the AM session, right? So you typically want to see some movement, typically some manipulation, ideally, which is most likely to happen in the 9:30 session. You want to see some manipulation and then run for some sell side liquidity before it runs to the buy side. Now, bonus tip here is really going to be about this opening range gap. Now, I use the opening range gap a lot to formulate a bias for the morning as well. And I'm going to go over what the opening range gap is in a little bit. But essentially, with the opening range gap, it is the difference between the 4:59 p.m. and the 9:30 open from the previous day to today's open, right? And, you can toggle the RTH setting out of the ETH, which is basically regular trading hours versus electronic. If you go to regular trading hours, you can see that opening range gap. It's a big gap, typically an inefficiency in price between that block of time between yesterday's close and today's open. And the consequent encroachment of that is typically going to be, price is going to return to that within the first 30 minutes of that trading session. And, this is just one important tip to understand, to what to expect between this 9:30 timeframe. And it actually can also be indicative of an expansion day to come, right? So if that opening range gap actually doesn't see that consequent encouragement return back to, or the opening range gap doesn't get filled and we start to run away in the opposite direction, we have an immediate expansion in one direction, then that being open is actually very indicative of what's likely to happen for the rest of the day. It's likely to have an expansion day in one direction. Like I said, we'll go over examples of this if this is confusing. Now, lastly, New York AM session, right, or otherwise known as London Close. Forgive me if I've, kind of butchered my time frame nomenclature, but this is to my knowledge what it's called. Okay, and so between this time, the major time blocks to be aware of is 10 to 11 a.m. and 11 to 11:30. Those are two separate time frames, and I'll tell you why. Macro times to be aware of, right, is the last 10 and first 10 minutes of every hour. That's within this time frame. So 9:50 to 10:10 and 10:50 to 11:10. Now, in the AM session, two things can likely occur. You're likely going to have the AM trend, okay? So the AM trend will typically kick off around 10 a.m., okay? And what does that really mean? It really just means like where price is likely to trend towards for the rest of the AM session from 10 to 11:30. So if price by 10 a.m. is starting to make bullish price action and it's starting to trail higher, it's likely to continue to trail higher until around 11 to 11:30, right? And that's why that 10 to 11 and 11:30 is very important. Because 10 to 11 is likely we're going to see that AM trend kick off. And then by 11 o'clock, you'll typically see some consolidation or a reversal of that move. Now, consolidation is now the next thing I want to talk about, because if you do not see this AM trend, then it's likely to consolidate, right, for the rest of the AM session, right? So from 10 to 10 to 10:50 rather, if price is consolidating starting around 10 o'clock, you're likely to see like a lot of seek and destroy conditions. We're just going from one liquidity pool to another. And it's not until 10:50 on those days, right? So this is why there's a lot I'm talking about. We'll go over examples, but you need to be taking notes. The move will typically happen at 10:50 if there is consolidation. I believe I have an example of this in the chart as well. Now, so a couple things to keep in mind is how can you tell that there's going to be a seek and destroy or consolidation condition? Typically, a lot of times, like if there's a target that's been hit, a key liquidity target that's been hit by 9:30 or 10 o'clock for like kind of that open, let's say the previous day high was rated already, or the previous week high was rated, or there was a big pool on the 1 hour that has already got taken out, right? Then you're likely to consolidate from, that 10 to 1050 range. And also if nothing happens between like that macro 950 to 1010, it's just looking choppy, we're stuck in a range. If it doesn't break out immediately after 10 o'clock, then it's likely to just consolidate for the rest of the session as well. Also, if you had like a large expansion overnight as well, that can also another reason why you could see, a really choppiness in the nature of the AM trend. Now, let's actually start getting into some examples, and we'll start within the first part of the session here, pre-market open. So this is an example of when there's no news. Okay, so there's no news. Typically when there's no news, some of the best price action you're going to see for the day actually will happen before the 9:30 open. Okay, and ICT talks about it this way. Between that first 30 minutes of each hour, right? So 7 to 7:30, 8 to 8:30, and 9 to 9:30, you will typically see equal highs and equal lows being formed. And then in the following 30 minutes is when they would usually raid those equal highs and equal lows, right? So this is helping you formulate a bias in time of day so that you can know what's likely to happen when, so you're even more stronger. You feel stronger about your bias. So for example, look at 7 to 7:30. These relatively equal lows and equal highs are forming. So what you want to do is wait until it gets the opposite end of the range. So you can see that here. And then price breaks market structure of those candles high. Maybe you execute, market because you see it's super strong and you don't want to see it retrace lower. So you get in market and then you're going to aim for the opposite end of the range, right? So the relative equal highs, you can see that gets rated here around that 750 to 810 macro actually, right? So like I said, also between that macro, within this 30-minute period, the 750 to 810 right here is also a time where you're right. We're taking out liquidity rate. And then you can see we break market structure lower. Okay. And we start to run lower. And now we form another pair of relative equal lows between that 8 to 8:30, right? We have another pair of relative equal lows now forming around then. And then doing 8:30 to 9, okay, price runs. It takes out some of these relative equal highs right here. And then, relative equal highs are now formed again, in this 9 to 9:30 session. Prior to it, we take out the relative equal lows from here. Okay, so you can see that we're just going from one opposite direct end to another, right? So we now take out a series of relative equal lows here. And then also going into the 9:30 open, price slams higher and takes out all the relative equal highs that were formed here. So what you want to look for is, again, to summarize, on a no news Monday or no news Tuesday or whatever, before 9:30, you want to be looking for where are the relative equal lows, relative equal highs, which ones have been taken out yet, has the opposite side of that been taken out. If you have both sides, you want to wait for one side to get taken out, and then you can buy to go to the other side, like here, for example. And now we're in a premium, we've taken out all this stuff here. So, now what's likely to happen, right? There's relative equal lows here and here even, right? So here and even pre 7 o'clock. Now there's relative equals here, 1, 2, and 3, all haven't even taken out each other. So what happens when, you get up here, price runs lower, you have another run higher here, and eventually we do end up taking out all these relative equal lows here as well, right? On this candle right here. And then we run to the opposite side of the range where all these relative equal highs get taken out. Now, let's talk about the large expansion, right? So this was just the previous one was an example where we had no news, but here's where we actually have a large expansion from the midnight open, right? So you can see here, this is the midnight open formulating here at 12 a.m., right? So that's where we opened up. And you can see that by 7 a.m. here, we've already moved about 400 plus points. Okay, so there's been a large expansion away from the 12 midnight. And so you see coming into the AM, right? Look at that 9, 10 a.m. Price is really choppy, but pre that has actually been pretty good movement from 7 to 9. So let's go over this analysis again. So 7 to 7:30, you can see some relative equal lows are forming right here, right? We've already had a buy side raid right here, and we broke market structure lower. We now have some relative equal lows forming. This is actually could have been your first entry here to run against, lows here, even relative equal lows here. So the point is, even though sometimes maybe not at 7 to 7:30 or 8 to 8:30 in those first 30 minutes, maybe you don't see the relative equal highs or lows forming there. At the end of the day, you need to just think about in this whole 7 to 9:30 time frame, there's relative equal highs on one range, relative equal lows on the other range, and price is likely to reach for any one of them, right? So when I see that, we're at a steep premium here, we've broken market structure for value gap, I enter here, my stop loss is above this recent high, post this breaker, and I'm waiting to run to the opposite of the run range. There's relative equal lows right here. That's getting taken out. And then 7 to 7:30, we've now formed relative equal lows here, or 7:30 to 8. Price, after running these equal lows, now break market structure, start running higher, take out these relative equal highs. that were formed in the first 30 minutes here. And then we now have another break of market structure lower here, right? And where are the next relative equal lows we could target after we've taken out these relative equal highs? Right here. So you can see price runs lower, and it actually forms relative equal lows right here. Runs higher one more time. Price breaks market structure to take out these relative equal lows that just formed. Runs higher, and ultimately at 9:30 open, you can see we take out these relative equal lows that formed here. So, like I said, if you want to study this information closer and you want to see this PDF, there's actually going to be inside my Discord, so feel free to stick around then. Now, here at the pre-market open, there's also another example here where it's actually macro time. So, this is the same slide as before, but actually look at 850 to 910 right here. There's been a short-term rate on liquidity, break of market structure, fair value gap, forms right here. Turns back to the OTE level. Your stop loss would go above this candle's high, right? And then you can aim for lower because you have this relative equal lows here. And also there's some liquidity pools further to the left over here that price slants for as well. But this is an example of a trade setup that you can see high probability also in between that 850 to 910 macro time.